Every Friday, we take a look at a particular Southern African market, and for this week, we are traveling to Zimbabwe. Now, it's been in the news for a couple of factors, and we'll be delving into those in just a couple of minutes. First, we'll be taking a look at the fact that energy-intensive users have been requested to cut their output, or rather their usage, by up to 25%. So we'll be delving into that, and then we'll look at the economic indicators of that particular country, and then lastly, whether or not there is still an investment case for this particular country. But to help me put all of this into perspective, I am now joined by Sebastian Gumbo. He's a sales trader at Momentum SP Reid Securities. Thank you so much for joining me today, Sebastian.
Thank you.
Firstly, this has been in the news in terms of energy usage by huge intensive users like miners. Give us some context around what is currently happening here.
Okay, the situation is basically the power utilities are struggling. There hasn't been investment for a very long time, and capacity usage, the capacity available at the moment, is under severe strain. Part of the reasons for this are the low water levels at Kariba, which is one of the major power utilities there.
Because a lot of it is from hydro.
And a lot of it is because of hydro, and because we share that utility with the Zambian government, so there is competing demand there. And also because of maintenance, which is scheduled, and some of it which is because of the poor maintenance in the recent past. So as you can see, there's a growth in demand, which hasn't been matched by a growth in the supply.
Sebastian, I know that obviously you know a lot about Zimbabwe, but just give us a sense. I mean, we hear that the electricity constraints are so bad. A further 25% cut. This is going to be, quite a big squeeze for doing business.
Absolutely. The government at the moment is trying to stage an economic recovery. And if you're telling your big consumers, which are the mines, for instance, and going as far as asking even the military and the police to cut back their usage, it spells disaster. With low production, to divert to domestic users, which is a social sort of policy, it creates a conflict which I understand governments have to strike a balance with. But unfortunately, it doesn't bode well for the economy as a whole. It's unfortunate that it's the big producers who are making the most money and bringing in the most forex that are the ones that have had to take the cane for this.
Let's look at some of the economic indicators in terms of what's come out of Zimbabwe. The economic analysis, what are some of the numbers that we've seen? Okay,
the most recent statistics I have are the inflation for August, year on year, which was minus 2.77%. That it basically says prices are coming off. And so you can understand for businesses which have borrowed, for instance, what this means. It means you've borrowed at a certain rate of interest, you've projected certain revenues, but unfortunately you can't match those targets. You can't meet them because the price level has come down. So the pinch has been borne by the producers. What that means is they've had to rationalize their costs, reduce their overheads by laying off employees, perhaps reducing some of the other costs that are involved in their businesses, and that has had a knock-on effect for the entire economy because the consumers themselves now no longer have as much disposable income as they had before.
Well, in terms of an investment case for Zimbabwe, I know being an African country, emerging markets like ourselves being South Africa, it's been flagged that we will not be seeing a lot of this money flowing back to us. So in terms of how are they going to be able to attract funds, especially when it comes to FDI?
Okay, the most important thing, which is overarching, is the dollarized economy. So the predominant currency in Zimbabwe is the US dollar. So for the big foreign houses, there's no currency risk. But apart from that, in the recent past, we've heard government come out with positive policies, suggestions, which perhaps have not been followed through on in the form of being enacted into law. I'll cite an example where the Vice President came out and spoke openly about the need to attract foreign investment and creating a conducive environment, for instance, by securing property rights and such things. That does well. It's an important first step, but it's not enough. We can also look at the example of the staff monitor program of the IMF. It's a positive sign from the government. They're willing to engage with the multilateral institutions. And it's important that we cut back on the debt that's there, and hopefully that will free up a little bit more fiscal space to borrow a little bit more and find a balance between the capital that's already available and what we can get from external sources.
Let's look at some of the company news. It is Friday. I'm sure a lot of people might be hitting those bars already. SAB and AB InBev have been really big in terms of a focus, but Delta being also another brewer based having a Zimbabwe focus. What's the latest there? Just give us a sense of the performance of that company.
Okay, the company has been struggling lately, evidently because of the economy. So because the consumers don't have as much disposable income as they had, say, a year ago, which is the comparative period, it has been difficult to maintain the same sort of profitability. We're seeing a situation where the management of the company has come back to the consumer and said, we'll give you a price discount, which came into effect at the beginning of this month, to boost their capacity, because we fear that the level of consumption was threatening to fall below a level where it was economic to produce for the company, or perhaps was threatening to reduce the margins and therefore the returns for the shareholders. So it's encouraging that they're taking a proactive role there, but clearly the signs there are, it's tough times out there, and it's testament to the management there that they've taken this first step to kind of head off this potential problem in the near future.
Another consumer-facing company in Zim is Innscor. I mean, what's the latest there? They're in retailing, but also in manufacturing, and given the energy situation, this might make one nervous, no?
It's difficult, like we said, for all businesses in Zimbabwe, but we always look for the silver lining, or the businesses that are most likely to weather the most harsh environment. And Innscor is one of those businesses because it is a conglomerate, it is diversified, and we expect if one business does not do well, the other part of the business will pick up the pieces. So I would say Innscor has had a rough patch. Management there is also looking to restructure the business by divesting, or rather issuing as a dividend in specie, the quick service restaurant part of the business, which is the fast foods business. But unfortunately, the group as a whole, this past set of financials was dragged down by the part of the business which does basically all the goods from consumer staples to white goods, which includes companies like National Foods, Colcom, Irvins, and those sort of businesses. So it has been difficult for them, but hopefully this restructuring will free up a little bit of cash and they will be able to weather this storm.
Sebastian, thanks so much for giving us an overview and update on Zimbabwe. We'll be seeing you again soon, so you can tell us about the latest developments. Thank you so much to our commentator today. Of course, that was Sebastian Gumbo. He is the sales trader from Momentum SP Reid Securities. That's